Hey guys, this is Mike Sumsky with Washington Home Solutions, and also I'm the group leader of the Real Estate Association of Puget Sound's Kitsap chapter, and I'm here to talk to you a little bit about buying real estate without your own cash or credit. That's been a question that people have asked me quite a bit. In fact, if I were to find out what the number one problem that most people who want to get into real estate investing, and even a lot of seasoned investors is, the problem they've got most is there's so much opportunity out there right now that they don't have the cash required to purchase homes. Let's face it, you need to have cash to buy real estate. That's how you're going to get the best deals. You know, if you're making an offer on a home where you're going to have a 30-day close using a traditional lender, someone's going to step up there that has cash, going to be able to make a lower offer with a quicker close and get the deal. So you get the best deals when you have cash. In fact, if you want to buy foreclosures in Washington State, you're going to need cash also. There's no getting regular financing. Someone has to pay cash at the auction steps to buy the house. And you know, many of the best bank-owned homes on the market, a lot of them need to be fixed up. In fact, if the house needs a new roof, if it needs a lot of other major remodeling, most lenders, traditional lenders, will not finance that purchase. So even though you need cash, the secret is it doesn't have to be your cash. It's called OPM, other people's money. In fact, when you borrow money from a bank to buy real estate, you are using OPM. But how hard is it to get a bank loan now? You know, it's darn near impossible. You know, unless you have great credit, a long-term stable income, and especially with investment property, you need a large down payment to get a regular loan. And there's just tons of hoops to jump through. So some investors will go out and find hard money loans. What is a hard money loan? It's an investment loan from a professional lender which will be used for purchasing real estate. Now, hard money loans are good in a pinch. If you have no other way to buy the home but you've got a really good deal, hard money loans are fine. But they are expensive. You'll usually pay about 2 to 4 points. Your interest rate will be 12 to 18% on average. And often now you'll actually still need to put some of your own money into the deal. There are hard money lenders out there who will finance a purchase 100% depending on the deal, but a lot of them now are still requiring you to put some cash in. And just about all hard money lenders will have a short balloon payment, which can limit your exit strategy. So they will usually want to be paid back their money in 4 to 6 months. Some will go out to a year, but it's pretty expensive to start getting that money going out that long. So what is the solution? Well, the solution is private money loans. So sometimes people call them soft money loans. Now, this is money from regular people, now I mean non-professional lenders that you can use to purchase real estate. So what is the difference between hard money versus private money? Well, with hard money, the rules are made for you. The hard money lender is going to dictate how many points you'll pay, the interest rate, the length of term, and what kind of your own cash, how much of your own cash you may need in a deal. So they make all the rules. With private money, you make the rules. In fact, 0 points is typically what you'll want to pay with private money. 5 to 8% interest is a great interest rate. I pay my lenders 7% interest and no points. And long-term loans are not only common with private money, they're actually preferred. If the lender's not getting points, that's money up front. Every 1 point or every 1% is 1 point. So if the lender's not getting money up front for the loan, then typically they're just going to want that money to earn interest for a long time. And you can actually get better than no money down deals, as I'll show you in a bit. So why would somebody loan you money? Well, right now, frankly, most investment deals or vehicles suck. You know, you can put your money in the stock market, but that's often a roller coaster. Sure, you could win big, but you can also lose big. Most investors right now, considering the problems that we've had over the last decade with different investment vehicles, they're more interested in asset preservation than they are with asset growth. And the proof of that is with the number of investors that are putting their money into safe bets like CDs which are paying less than 2% interest. Now, real estate that's purchased at a discount is very secure. It's also a controllable asset that pays for itself. What I mean is that in controllables that you get to choose the properties that you invest in. And if you're renting the property out, that property will get investment income, which should be sufficient to make the payment. So it's more important that the property you purchase rather than your borrowing ability, your credit, your income, that sort of thing. It's all about taking problems and turning them into opportunities. So there's a problem for the seller. They need to liquidate a home, whether that seller is an individual, a motivated seller, or if it's a bank. There's also a problem for the private lender. Whoever has the money is looking to get a good secured return on their investment dollar. And finally, there's a problem for you. You want to buy an investment property but don't have the cash. So let me go through a sample deal, let you know how private money works. I found a deal in Bremerton. It had a motivated seller, a gentleman who inherited a property. It needed a lot of work, and he agreed to sell the home to me for only $55,000. Now, part of the reason I was able to get the house so cheap is that I was able to close within a week because I had cash. Well, that cash didn't come from me. It came from a private lender. And the home, in addition to the $55,000 purchase price, it needed repairs about $25,000. So in order to buy the home, I'd at least need $80,000 plus some closing costs. Well, I ended up borrowing $85,000 from a private lender, and I gave that lender a mortgage on the house, so they had security on the property. Well, the lender was well secured because after fix-up, the house is going to be worth more than $150,000. So with all that equity buffer, the lender didn't really care about my credit situation. If I'm fixing up that house and I'm borrowing 85 on a house that's worth 150, they have that collateral. There's nothing that really can go wrong with that deal that could put that lender in jeopardy with all of that equity buffer. And so I paid the lender 7% interest-only payments, so monthly payments of just under $500. Now, with this property, I could have rented the house out for $900 a month if I wanted to. I could have had an excellent cash flow even after taxes and insurance, so the house would pay for itself. But because I was able to get it so cheap, I was looking to get cashed out, and I did sell the house to a new buyer and made just about $65,000. Now, just to review, I had none of my own money in this deal. All of the money that I had needed for the purchase, the remodel, it came from a private lender. In fact, I actually got paid at closing when I bought the home. You see, the repairs were about $25,000, and I borrowed a little bit more than what I needed for repairs. So I actually put some money in my pocket the day I bought the house. And I never had to provide a credit report or fill out a loan application. So the investment stood on its own. So how do you find these private lenders? It's easier than you think, but most investors go about it all wrong. They feel like they have to convince someone to give money to them. It's almost like they feel like they have to beg, and it puts the investor in a poor negotiating standpoint. They actually think that they'll be more likely to get private lender if they offer a higher interest rate. Well, it's actually the opposite. The funny thing is that the lower the interest rate you offer, oftentimes the easier it is to actually get private money. And that's because most people equate high return with high risk. So if you're offering a private lender 12 to 18%, if it's a hard money lender, somebody who's in the business of lending money, they understand real estate, they understand the risks, and so they're going to ask for a higher return. But for the average person who's looking to invest, offering somebody 12 to 18%, it's a great return, but it kind of feels risky. So the 7% return that I offered, or the 5 to 8% that you can get with private money, that seems more realistic to people. It's actually easier to get those loans. And you know what? They are safer because you can get houses at cash flow if you're offering those lower interest rates. So how do we find these lenders? Well, here are a couple investors who do it right. Rob and Kristi Russell out of Portland, Oregon. They are full-time investors, and they just did 2 deals last month where they got private lenders to fund their entire transactions. Actually, one lender lent at 5% on one deal and the other at 6% interest with absolutely no points. So no upfront fee for getting these loans. They're full-time investors. They're in the trenches every single day, and they've actually perfected the art of raising private money to purchase homes. In fact, they actually have a waiting list of investors who want to lend to them. So after talking to Rob and Kristi, I've known them for a while, I actually invited them to come and speak at the next Paulsbo Reaps Kitsap event. They're going to come and teach how to attract soft private money in the 5 to 8% range. This is the range that you should be paying for cash in order to buy real estate. They're going to show you how you can start the conversation with a new private lender without feeling like you're asking for a favor. They're going to show you how to tap into a huge source of low-interest private money that most investors completely overlook. In fact, I've been fortunate enough to find a lender from this source, and this lender's lent to me several times over, and they're going to share that with you also. They're also going to show you how to some proven follow-up systems that they use to gain the lender's trust and to have them calling you wanting to lend. So you are invited. It's going to be this Thursday, April 7th at 6:30 p.m. The meeting takes place at the Paulsbo Library, and it's free for Real Estate Association of Puget Sound members. And if you're a non-member, it's $15 to get in, but this is going to be a content-packed meeting. You're going to learn a lot. If you're just getting into investing, you're going to get the tools to start off on the right foot. And if you're a seasoned investor looking to do more deals and to find better private money, this is going to be a great one to attend. So in order to pre-register, click on the link below this video. It'll take you to the pre-registration page, and the seats are going to be filling up fast, and we can't guarantee there's going to be seating for everyone, so make sure you click on that link, pre-register. We will see you April 7th, and good investing.